Hola, mi gente. Welcome back to Latino Investor. I know it's been a while since I've recorded an episode on YouTube, and I really apologize for that, but I want to change 2025 and start off strong. So, in this episode, we're going to be covering my portfolio performance since I started investing, as well as why I am currently buying the Dutch company ASML. And lastly, we're going to be turning to TikTok to react to some of the videos on there and give my honest opinion. We have a lot to cover in this episode, so let's jump right into it. Let's start off by reviewing my portfolio performance since I've started investing. We see that I've already signed into my account with Schwab, and we're going to go to the portfolio performance tab. In this tab, we're going to look at the value versus net contributions and the rate of return of both of my portfolios combined, which is my Roth IRA and my taxable brokerage account. Taking a look at the value versus net contributions since I've started, we see that I have contributed about $44,000 to my portfolios, and they have had an investment change which takes into account gains and losses and dividends of about $18,000, bringing the total portfolio value of about $62,000. Jumping over to the rate of return section, we see that if we were to annualize my returns since I have started, it would sit at about 29%. Comparing this to the Nasdaq and the S&P 500 indices, we see that my investment strategy has done better than both. However, it is important that I did not outperform by a big margin. Nevertheless, this gives me confidence to keep investing the way I have been, which is buying high quality companies on a dip while keeping a solid foundation of low cost index ETFs. Probably wondering how I characterize high quality companies, and I wanted to share that I just finished a PDF that outlines how to get started in stock market investing. Scrolling through this PDF, we see that I have a step by step on how to get started. And as we keep going down, we have my investment philosophy, goals, and other things in this PDF. Towards the bottom, I start talking about investing in high quality companies. It's in this section that I talk about the characteristics of a high quality company, such as the moat of the company, fundamentals of the company, such as the revenue and earnings per share, profitability and efficiency of the business, as well as give examples using the website called Qualtrim. If you have not heard of it, I would encourage you to check it out because I found it useful to visually see the fundamentals of a company in this format, because it's easy to spot trends. You will need to pay for it, and I'm not sponsored in any way by them, but it has been the backbone of my investment research. With that, let's move on to why I'm currently buying shares of the company ASML. As you can see, I'm on Qualtrim, which is the website that I've mentioned before. ASML is a Dutch company that specializes in the patterning process of advanced chip making. In a world where technology is advancing every year, we see that having advanced chips has become an essential part of our life, with their use ranging from our smartphones, PCs, and cars to military applications, including radar systems, satellites, and cybersecurity. So, production of semiconductors has sparked a race around the globe between countries to get ahead, and we are seeing billions of dollars being spent in this industry. I believe ASML is in a position to benefit immensely in the next decades, and it is because they're the only company that manufactures extreme ultraviolet lithography machines. EUV machines are the only instruments able to create the smallest and most efficient chips needed to power complex systems, such as the ones I mentioned before. And these machines are very complex. It takes 3 jumbo jets to transport. They contain over 100,000 pieces, and they use precision lasers, exploding molten tin, and ultra flat surfaces. Their technology is years ahead of the nearest competitors, and they heavily invest in research and development to maintain that gap. This has led to a near monopoly on the EUV systems and owning over 80% of the patterning market. So we can conclude that ASML has a technological moat protecting its business. Let's jump over to their fundamentals. Taking a look at their revenue, we see that this company has been able to generate more money by about 18% per year in the last 10 years, with exponential growth in the last few years. However, before the AI buzz that we are seeing today, ASML was growing their revenues predictably before that. In addition, we see that ASML's bottom line has also been growing with the revenue growth, with predictable double-digit growth in both their net income and earnings per share. ASML's free cash flow has been a bit more volatile than the other metrics, but it's important to know that this company operates in a capital intensive business. So a lot of money is spent on building the machines and R&D to keep the company's technological advancement. Moving forward, I expect free cash flow to change direction and start moving back upwards. Lastly, ASML is a profitable and efficient business with profit margins of over 20% and return on capital employed above 30%. So, if ASML is fundamentally a good company with a moat, why has it fallen over 30% from its highs? Well, there are a couple of reasons. First, in their most recent earnings report, the company lowered their 2025 sales guidance from 30 to 40 billion euros to 30 to 35 billion euros due to a slower market recovery than anticipated and their sales in China reverting down to their historical average of 20%. The second reason why ASML has seen a steep drop from its highs has been their quarterly bookings number that they reported. Bookings is sort of the backlog of demand that ASML has, since their machines are very big and complex. It takes weeks to ship the instruments and assemble for their customers. The previous quarter, ASML reported bookings of 2.6 billion euros versus the 5.39 billion expected. Now, investing in ASML involves risk, especially since the semiconductor business is cyclical and they derive a portion of their sales from China. ASML is caught in a fight between the US and China, seeing pressure from the US to control exports to China. Nevertheless, I interpret these risk factors as short term headwinds, and I think ASML will benefit from the mobilization of countries to prioritize home production of chips. With more factories of TSMC opening up throughout the world, that means they will need more EUV machines and ASML techs to service those machines. I will continue to buy this company for now. Now, let's turn to TikTok and react to some of the advice there. Recently, I've been seeing a lot of content around Index Universal Life Insurance, and I wanted to give my take on it. Here we have a video that I actually think has some valuable information, but I disagree in the way to go about it. Let's take a look to see what I'm talking about.
¿Por qué los americanos siempre tienen dinero? Y esto es porque ellos no ahorran en el banco. Ellos ahorran en los fondos indexados porque aquí pueden obtener hasta un 9.25% anual.
So he's basically saying Americans are not wealthy because they save their money in a bank, but rather because they invest in index funds. And I actually agree. Saving your way to wealth is nearly impossible for most people because we simply do not have high enough incomes. So most of us need to find ways to invest our money because our money can work harder than our body will permit.
Por ejemplo, tú puedes iniciar haciendo aportaciones de $50 semanales, que estos son $200 mensuales. ¿Quién no puede poner $200 mensuales en su ahorro? Ahora, si tú ahorras esta cantidad durante 20 años, te darás cuenta que con ese 9.25% tú vas a lograr obtener hasta $137,000.
That is true. If you're able to invest $200 a month at a 9.25 interest rate for 20 years, you will have more money because you will benefit from compounded growth.
De este dinero no vas a tener que pagar impuestos porque goza de beneficios fiscales que te permitirá sacarlos libres de impuestos. Aparte de que te va a dar beneficios en caso de que pases por enfermedades críticas, crónicas y terminales.
Now, I want to point something out. If you notice, he switched the blue words from the beginning, saying index funds to index accounts now. Investing in index funds does not automatically make it tax free or have these benefits that he just listed. Instead, those benefits depend on the account in which you own the index funds in, like a Roth IRA. In this case, I'm assuming he's referring to an IUL because if I click on his profile, he has more content around IULs and describes himself as an IUL specialist.
5 razones por las cuales te recomiendo tener un IUL que otra cuenta.
That is why he switched it from index funds to index products, because he would be wrong. Let's finish the video.
Que pases por enfermedades críticas, crónicas y terminales. Y es aquí donde quiero que veas lo que el banco hace. El banco te da un 0.01% anual. ¿Qué quiere decir esto? En el mismo ejemplo de los $200 mensuales, a lo largo de 20 años solamente lograrás obtener arriba de $48,000. Si hacemos la comparativa, tiene mucho más beneficio trabajar en productos indexados que trabajarlo en el banco. Además de que en cuentas indexadas tienes beneficios de protección, como te lo acabo de decir, y el banco no tiene nada adicional. Si quieres más información, escríbeme un mensaje.
Overall, I agree that people become wealthy from investing rather than having our money sit in the bank. But most Americans don't use an IUL to achieve wealth. IULs are actually terrible investments because it tries to mix life insurance and investing, and it does terrible in the investment part. Let me show you. If we check out this example from the Personal Finance Club, we see that they ran the numbers to show a $500 a month invested in an S&P 500 index fund versus a $500 a month premium payment towards an IUL with a 0% floor and a 12% cap and zero fees. That means if the market goes down 20% in a year, you lose 0% of the IUL cash value. But if the market goes up by 25%, like this last year, then your account only went up 12%, missing out on 13%. With this illustration, we see that it's far better to invest in the S&P 500 directly in a Roth IRA than an IUL. The Roth IRA would almost triple the performance of the IUL, which in this case meant someone with an IUL missed out on millions. In addition, they market IULs as protection from stock market crashes. But if we jump over to macrotrends.net and we take a look at the returns of the S&P 500 in the last 30 years, we see that the market has only gone down 7 times. And the rest of the time, the market was actually up, and it went up by more than just 12%. And if the market went up 25% like it did last year, the insurance company only paid you 12% and kept the difference. The reality is you get an average of about 4% in an IUL after all expenses and fees are taken out, which are typically pretty high. So Mal, if IUL are terrible investments, why are there financial specialists selling IULs? Well, it's because these people earn hefty commissions when they sell you this type of policy. Certainly more than if they were to sell you basic term life insurance because of what I just said. They know the market goes up more often than not and they end up making more money. And on top of that, they hit you with all these fees that eat out your returns. So guys, if you see these videos on social media and people selling these financial products as good investments, go ahead and do your own research because if it sounds too good to be true, it's probably not that good. And you got to realize why they're trying to sell you that product. Most of the time, they earn high commissions and they're really looking out for their own interests, not so much yours. And just a reminder if you guys want to take a look at my PDF to Introduction to Stock Market Investing, go ahead and check out the links in my profile. It'll be in there free. I don't make any money if you guys decide to invest or if you guys decide to open up a Roth IRA. It's really just information to you guys. So if you guys like the video, go ahead and drop a like and subscribe to the channel. Go ahead and check out the Instagram page and TikTok. Hopefully it doesn't get banned. If it does, go ahead and still check it out. So hasta la próxima, raza.